Now let me bring our guest today, Mr. Ashish Shah, the Assistant Vice President at Sushil Finance. He's joining us live from Mumbai. Ashish, first question, crude price, is it good actually to short again today? There was some weakness on Monday and also on Friday. Do you think perhaps that trend is going to continue? Because again, on rupee, we have not seen any sort of major turn here. No major depreciation is coming in rupee here. So broadly, the focus is on crude. The Brent and the WTI, particular WTI crude again for the M6 crude perspective here. So what's a good strategy for the M6 crude here?
So yeah, I think over the last 1 week, crude prices have very aggressively corrected. It almost reached our target of 5,000, which we had discussed probably last week. And since then, we've seen prices coming down to about 4,500 at current levels. So almost 10% prices have washed out. There would be some sort of a dead cat bounce or maybe a little bit of short covering at current levels, which can pull up prices to about 4620 to 4650. But I think the correction may still continue because the volumes have been heavy as far as these price corrections are concerned. So maybe any recovery near the 46 area or 4650 will be a strategy to sell. And I would still advise long positions to remain a little cautious at current levels and exit at any rallies near the broadly near the 4700, because that's where the upside will remain capped. But broadly, over the next 1 month, I think crude on MCX will be range bound between 4800 or 4900, and on the lower side about 4350 to 44.
Right, Ashish, just hold on. I just want to actually bring BHL again, just to bring the focus on that for a minute here. About half an hour back, the results came. We talked about it. The stock actually was up immediately 3% after the results here. Now the stock is 8% up, 12% addition to the open interest. So just keep the stock in the radar here. It appears perhaps some more short covering is happening in the counter. That's a vertical spike which is happening right now. Almost 8% up is the counter after the results. So again, L&T good results, good reaction. BHL again, a good stock price reaction, perhaps results sort of a view again could be different here, but still good short covering happening in the counter and good open interest build up is happening here. So a stock perhaps you should be keeping at present on your screen right now. From BHL again, let's come back to what we were talking with Ashish here. Ashish, a follow up on the crude here, perhaps because in terms of US production, perhaps that has been rising, rig count has been rising. There has been commentary from the Russians and the Saudis just to cool off the market here. And if I again recall the hedge fund positioning, that was largely totally one-sided in favor of long Brent crude here. So do you expect any sort of major unwinding to actually continue this week, and that perhaps could push the prices almost 3 to 5% lower? Is that a reasonable assumption?
Well, it can be. See, I mean, the broad fundamentals are always going to be changing, because the moment the prices are going to increase beyond the $80 area, I think most of the OPEC and non-OPEC as well as US are going to pump in oil, because they do not want the prices to even breach a certain level, because that will lead to demand destruction in a big way. But at the same time, as and when the prices will cool off, I think there is going to be demand from the growing economies. As far as the fund unwinding is concerned, yes, I strongly believe that most of the long positions will start capping on the profits at any levels above the $75 or the $80 area on a broad perspective. So yes, I think on MCX also, whatever rupee weakness has given the support has pushed the prices. So by and large, the rupee weakness also has been discounted in the prices. So I think 5,000 on MCX has been a very fairly reasonable price, and crossing that will require very strong fundamentals, which currently don't seem to be coming in the near future.
Right. So again, that's the view on crude here, Ashish. What's your view on the gold and silver, especially in the context that there are sort of twin sort of I should say at present twin trends again which are unfolding here. So for again traders who love trading in gold, now again they would be facing some difficulty here. Primarily again, gold and dollars is not giving actually enough reasons to be bullish. When I'm looking in terms of currency trends, dollar index is actually giving me reason to be bullish on dollar. When I'm looking at rupee again, strangely in the last 2 sessions, rupee is actually appreciating here. So is it best to avoid gold trading right now, or you actually have a view here?
See, as far as trading is concerned, all the commodities across board can be traded, but then the view has to be really restricted to short term and the stop losses have to be really firm. Unless somebody is looking at a 3 or 4 month perspective, then it's a long term view. For that, I would definitely opt for silver going long, because I think silver is one commodity, though it is currently following gold as well as a little bit on the base metals, but the prices are still undervalued as far as this commodity is concerned. So anything near the 39,500 or the 38,000 area is a price where silver may correct, but that will be an investment opportunity from the long term. As far as gold is concerned, I think despite the weakness in the dollar index, the prices are not really rallying. Technically, we see more of a triple top kind of a thing, where the prices are correcting anything above 31,500 area. So I think 30,900 is a critical stop loss. If the prices close below 30,900 on gold, I see prices correcting eventually to about 30,500. So as a position, I would like to be short on gold with a major stop loss above the 31,300 for a target price of 30,500 on a very long term basis.
So the bias again, that should be negative. Again, you could be making tactical strategies, but what Ashish is telling you, that the bias, the tactical bias again is negative here. It's looking like a negative bias from a positional perspective here. Ashish, base metals, again the screen is telling me it's looking all green. It's a sea of green for the base metals today. Aluminum again almost flat, but copper again good 1% up, nickel 1.5% up, lead 1% up, zinc 1% up. So it's looking like a good screen for the base metals there. Anything which you like at present base metals here, and why again there is a rally in base metals today?
So one is obviously we have read the reports about Trump again trying to clarify on the trades with North Korea. So obviously that has created a boost in the economy, and the general sentiment seems to be bullish towards growth, the economic growth. So that is going to create a slight positive impact as far as the base metals are concerned. Now that's the reason why we have seen, but yes, the week has a lot of data also likely to be released. The FOMC is there, the non-farm is there, so all that is going to eventually create impact on the prices. Amongst the base metal pact, I think zinc looks fairly stable at current levels. So if one needs to trade in the base metal sector, I would suggest zinc maybe at current levels with a stop loss below 206 would be a good price. For a target price of 210 and maybe 211 on the higher side. But once again, a little bit caution on the base metals, because markets have had a very long weekend. Practically all the markets were shut. So we need to be a little cautious on the base metal also. As far as nickel is concerned, one can stay long in nickel. This commodity seems to be holding and respecting the level of about 900 or 950 on the lower side. So one can look at buying this commodity, hold on to a position, and look at a target exit of about 1040 on the higher side.
Just very quickly, Ashish, again nickel, again it's at almost 3-year high. If I'm looking at the Chinese data, that is telling me that there are a lot of long positions which are continuously getting added in nickel here. Also, most of the steel sort of materials, again they are actually moving higher. Is there some reason perhaps you think nickel again, do you have any sort of positional sort of tactical view on nickel, or any particular targets or levels you're looking for nickel here?
See, nickel is a very essential component for stainless steel. I mean, that's the main raw material for production of stainless steel. Overall, the demand for stainless steel continues to remain high. I think the markets and the economic growth is the main fundamental reason for increase in the price outlook. I think nickel, as I just said a while back, the 950 technically is a very good support. I don't see the prices breaching that. We are also, yes, almost at all-time high. So I think if the prices sustain above 1000 consistently for a couple of more days, one should change their view to a long-term buy of about 1100, or maybe it may also cross 1100 in the weeks to come. But a stop loss for this same view should be on a close below 950.